What's going on? Welcome back. Hope you checked out the first video, just introduction. Listen, I'm gonna start outlining, start going over this trading plan, this program that I have incorporated in pretty much my main trading. It's the only thing that I'm doing right now. It's how I'm trading. Trying to scout, trying to be a sniper, just does not work for me with my work schedule, and just I'm not an advanced trader. I don't have the discipline, I don't have the expertise, and I really don't have the confidence in what I'm doing to try to scout. In other words, to predict what a candle is going to do, get in and then take profit and get out, but before it goes against me, and then panic because you don't have a predetermined risk management plan. In other words, you're just going in blind and hoping, praying that the candle goes in your favor. Sometimes it does, but oftentimes when it doesn't, it goes really not in your favor. So that's really what this plan is going to be about. It's about making money and not trade. We talked about that in the first video. What does that mean? P&L over the number of trades. And so another fancy. So that being said, let's hit you over to the main screen. Like I said, Team Alpha. I've been part of Team Alpha for a little over a year now. A good friend of mine and one of the founders, Brendan, he taught me this the 1 hour smart money zone, and that's what I'm going to try to share with you. Because I've kind of incorporated a 4 hour, and don't worry about it if you don't know what a smart money zone is. Basically support and resistance levels, and I am going to go into great detail and showing you how to plot out the smart money zones and how to use them. But first, before we can go there, we already talked about psychology of trading. It's one of the biggest things that is going to determine whether you're successful or a failure at becoming a trader. 98% of the traders fail, and mostly because they can't manage their psychology. Their risk, it outweighs their reward. Brandon pounded on me about RR, risk versus reward. What do you want? 3 to 1, 4 to 1 return on your risk. In other words, if you're going to be 1 to 1, you need more than half of your trades to go in your favor. But if you're 2 to 1 or 3 to 1, you can get away with less than half of the trades being in your favor, and you'll still make money. And the market does what the market wants to do, and it protects you from yourself, really, from the market, because when it goes against you, it's a small loss versus a big loss. I know it's about position size and stuff, but the first thing is really, what are the rules before you even take your first trade, first entry? You need to have some set rules in place. What is your plan? These are my rules. All entry, stop loss, and take profits are based on a 4 hour smart money zone. Where are you determining how are you getting in the market, and what is determining how are you getting out of the market? The risk is of course set on the opposite side of the 4 hour zone. We'll go into the great detail later on, and take profit 3 to 1 between the two. And a stop loss. When do you move your stop loss? Don't move your stop loss prematurely. Give the market time to go in your favor. When there's a difference between a range day and a trend day. When the trend is in your favor, ride it, because everybody else is going to try to ride that trend as well. Don't go against the trend. So plan accordingly. When are you going to move your stop loss into profits? Minimum 2 to 1 on mine. You may be 1 to 1. It's up to you. I personally do not trade the first hour and a half of the New York market. Between 9:30 and 11, I do not trade, because it is so erratic. It's hard to get a baseline of what's going on. You could be in a range for the entire pre-market, and then suddenly you go into open and it trends one direction, and if you're playing the opposite direction, you get eaten alive. So I don't personally right now, I don't trade in those hours. All entries are made using a 5-minute chart. You might use the 1, 2, 3 1 hour chart. It's up to you, but just stick with one of them. Stick with one of them so you can get used to how it reacts to the market. And then absolutely no indicators used. Don't bounce between 1 to 5 minute charts. Just always stay on a 5 minute chart. I don't use VWAP. Maybe occasionally I'll pull up the ETF, where if I'm trading the NASDAQ, the NQs or MNQs, I'll have the Qs up on another screen. Or if I'm trading MES, I'll have SPY up on another screen with maybe the VWAP. Because at least the ETFs tend to honor the VWAP a little bit more, but I do not trade based off of VWAP bounces, or anyone may not enter a trade off one of my zones based, hey, it's bouncing off VWAP here, I should probably hold off. And more importantly, trade like a robot. In other words, I don't care if the trade goes against me right now. It's basically where I'm at. I hit rock bottom. I got so tired of the market eating me alive. I'm like, I got to reset. I need to learn how to trade like a robot. I'm chasing profits, chasing my stop loss, chasing the price with my stop loss, and any little minor micro pullback, I'm getting stopped out. Then of course it turns around and goes in my favor, and I missed out on a lot of profit, a lot of gains. So my losses outweigh my gains because I'm so fixated on maintaining a green number that I don't allow the market time to grow. Like, there's times when your green numbers will have to turn red before they can turn big green. If you just keep getting stopped out, riding the price up, you'll never take advantage of the big moves of the market, and it gets frustrating. The market does not care about your emotions, especially 80% of the market's pretty much traded by algorithms and AIs now, so they don't care about your emotions. So don't trade emotionally. You need to trade like a robot. Have some rules in place and follow your rules. The market can keep going up and it can keep going down. Just because the market's up 4% don't mean the market can't go up 5%. We've seen that this year. Markets dropped I think 12% in a couple days. So the market can keep going down, and it can reverse in a single day and run up 5 or 6%. So momentum could be your friend. Don't always try to play the bounce, go against the trend. Play the trend. The market does follow the Newton's laws, like the first law. Object will remain in motion. If the market's going down, it's probably going to continue to go down until you have like the third law, which something big buyers, big sellers step in and stop that momentum. And then of course the force is equal to the mass times the acceleration. In other words, if the market is accelerating in a direction, it is probably going to continue to that direction for a while until there is substantial news or some other determining factor that forces it to stop its path. And more importantly, emotional traders will get eaten alive by the market. This is my P&L from my first funded account. It is not blown yet, but you can see I was up over $2,000 in it, and then suddenly I'm up about $800 in it right now. Trading one way, the market changed on me, and the way I was trading in the past stopped working. It started grinding me up. A lot of momentum plays. So when the market got into its extended range, I was not equipped to change my plan or adapt my plan. I mean, saw in the first one was the go for no. You're coming into the market with a predetermined idea of what is a lot of money to you. So when your P&L hits a certain amount of money, are you jamming that stop loss right up his butt so you can secure that $20, that $100, that $200, instead of giving the market time to grow. And then more importantly, a little sneak peek into what we're going to show you in later videos is I'm going to teach you how to identify A+ entries and how to avoid the false breakouts, and green trades will turn red, and there will be losses, but more importantly, there will be profits back tested this strategy, and this is pretty much was about a month and a half or so. I think it was I don't know if it's on here, several dozen trades or something like that. It was about 30 trades or something, and at the end of the day came out to a little over about $4,000 in profits trading one micro NQ. So you do not have to have large position sizes to make an extra $4,000 in a month. And really, that's some other stuff. Really, what would an extra $4,000 do to you if you can make it next month or so? Of course, it's going to take a while. It's going to take a little bit to get used to, get the hang of, learn this stuff. But once you have it, what could you do for an extra $4,000 or so? But are you willing to risk a couple $100 to make 4,000, or are you unable to control those emotions? That's really what this plan is about. Is a plan that allows us to control our emotions, because we take all the decision making away for the most part. Not all of it, but 99.9% of it. Anyways, an OG camo. I'm sorry, I'm on my. As you can tell, I'm not a professional public speaker, and this is not financial advice. But I'm just set up on this new streaming, my stream deck and stuff like that. So I don't know quite which buttons. There we go. Which buttons to hit always. So I'm not selling this program. I'm just recording these videos. I got the same clothes on. I'm pretty much recording all these videos on the same day. But I'm here to help. All the information for Team Alpha and all my contact information is down below. Feel free to jump in Team Alpha's Discord, free of charge. Hit me up, hit anybody up in there. We can teach you how to trade futures. Look forward to seeing you guys on the next one. Later.